All right, so welcome into our live stream today. We are going to jump into something that, of course, the thumb and the headline probably got your attention, and that is new data and analysts now looking for Bitcoin to hit 500K. But when? Well, you're going to have to listen in to learn that. My name is Paul Barron. Welcome back to TechPath. There's a ton of new data and also a lot of traction in the industry right now around, when I say industry, meaning the blockchain industry. Blockcoin, I love that one. Blockchain industry. Bitcoin's on my brain right now, so it's like just burned into the frontal cortex here, or the amygdala, as we say. Free the amygdala. Back to the point is that we are seeing some new data and some new analysis on how Bitcoin could be on a much heavier track than maybe even the best crypto analysts have been able to determine. And that's what we're going to break down today. And really, part of this is brewing across a lot of different fronts. I mean, the news that's coming right now in the blockchain industry is absolutely at a blistering pace. I feel like we have to be working 24/7 here at PBN because just the amount of data that we're having to crunch, as well as just the amount of movement in the altcoin space, as well as the emerging market within NFTs and NFT gaming. As you can see, guys, it's getting crazy out there. But let's jump to this first story. Rand Paul is now wondering if crypto should and will become a reserve currency. That being a statement in a headline, to me, is that crypto has arrived. When you get U.S. congressmen, senators, and the likes, we've had Congressman Emmer on here talking about the future of where that's going, and a lot of the challenges I think that D.C. is having right now in just trying to basically play catch up, whether you're sitting at and understanding what is happening around the SEC around stablecoins, which we're going to get to that in a video and break that down for you, because I think it will have a lot of bearing on where Tether is going and also USDC. But I want to get back to this story. Senator Rand Paul is wondering whether cryptocurrency could be dethrone the dollar as the world's reserve currency as it continues to grow in popularity. If it were to get to that level of popularity, we talked yesterday, and I don't know if you guys caught this video with Mark Moss. He mentioned something called the Chasm. And it is an interesting analysis because there is these adoption curves. You know, you've seen it in mobile when the iPhone and the BlackBerries kind of evolved all the way back to the Palm Pilots, if you're that old in tech and understand that. And then there was the evolution of the internet and really kind of the evolution of how that model. But prior to that, it was the OS wars, and that was everything from IBM and their operating system, which eventually migrated into Microsoft OS, and then eventually where Apple came onto the scene. All of this dealt with these adoption curves, and these adoption curves have these really four phases. You have the super early adopters, which basically are considered crazy. I've been there before. Then you have the early adopters that are much more mainstream, but they're still super early. Then you have the mass early adopters, which is the chasm. And that chasm is where I think a lot of people are looking at where Bitcoin and also cryptocurrency is going. Because if you get into the chasm, it is preparatory to mass adoption, meaning 25% plus or greater in the market space. Could you imagine if the world's population at 25% were involved in cryptocurrency in some way or another? That would be absolutely astounding. So what he's talking to look at is he started to question whether or not cryptocurrency could actually become the reserve currency. And this was more people lose confidence in the government. This is a big problem. Paul said in an interview, this was on Axios on HBO, just aired on Sunday night. And he's been amazed at the growth of it. I've always been a more person who believe the currency should be backed by something, including real value like gold or silver commodities. But Paul added that he believes the government currencies are also so unreliable. They're also fiat currencies, which are not backed by anything. This is one of our government officials making these claims, not anyone else. This is a government official voted into office. When he asked if there was a concern about illicit use of crypto and whether or not it should face more regulation, the senator pointed out government oversight of private banks. I guess I'm more concerned with government snooping into our private bank accounts, rather than cryptocurrency would be involved here, so into your bank account. So I think the scenario here that a lot of this is facing, and if you just look at the amount of gray market that's on in fiat dollars alone, the amount of money laundering that's in fiat dollars alone, versus what's happening into the small regulatory size of the scenario with where Bitcoin is. That's the big issue in the sense of that we are very, very early on this adoption curve, and this adoption curve is going to take us to the next layer. Let's jump over to what that next layer means, and that is this story right here. When we kind of put these together, what I'm trying to do for you on these market movers is give you guys a little bit of a Hansel and Gretel approach. We put together research. Usually research is triggered by data. It gets the research rolling. We'll go in and dive deeper on it. It's not investment advice, but hopefully it gives you a pathway, hence Tech Path, a pathway in which you guys can move into understanding new technologies and also your investment strategies around technology. Crypto, tech, and investing, that's what this show is about. So this story, U.S. regulators exploring how banks could hold crypto assets according to the FDIC chair. Now, this is a big step in the right direction, and the reason is when you look at this story, Jelena McWilliams chairs the FDIC. Remember, the FDIC, if you don't know what the FDIC does, let me kind of explain this really simple. The FDIC is basically the insurance company for regulated banks, meaning you're a depositor into Bank of America. Bank of America will hold your assets. If your assets get above $250,000, you're at risk, meaning you don't have insurance above that $250,000. I know a lot of people are like, I never get $250,000. But there's a lot of companies, institutions, etc., that do get to that, and that's where the FDIC comes into play. So much so that many people will hold many bank accounts, so they've got a $250,000 insurance from one bank account to the next, to the next, to the next, and all that is definitely happening. So the question will be, and what she's painting here is told Reuters in an interview on Monday that the team of U.S. bank regulators is trying to provide a roadmap for banks to engage with crypto assets. Now, if banks engage in crypto assets, this is going to bring out a whole different array, and I'll talk to you a second about that. But it could include clearer rules for holding cryptocurrency into custody, kind of zoom in on that, facilitating client trading, listen to that, using them as collateral for loans, listen to that in a big way, or even holding them on their balance sheets like more traditional assets. That one paragraph right there, this is very important because these three things affect massive moves in the marketplace. Let me break it down for you. That can include clear rules of holding custody into facilitating client trading. What does that affect? Client trading means that banks could eventually become pseudo exchanges. In other words, they'd be competing with and or partnering with companies like Coinbase or other companies that we've actually had here on this show that build exchanges for institutions, meaning giving every institution a TD Ameritrade type experience. Every institution you plug into your bank, you go and trade like you would on Schwab or any other exchange out there that's trading traditional derivatives, okay? So that's number one. A bank potentially rolling in, and this is applied toward crypto. Second point is using them for collateral for loans. She hits on the three things that the industry is essentially trying to put together through puzzle pieces. The banking industry is trying to swoop all this up in one place. So using collateral for loans. Now remember, today, if you walk into a bank, it's likely that your Bitcoin is not a collateral for a loan. Hence, you have companies like Nexo, Celsius, BlockFi, etc., that are doing those kinds of deals. And then soon, I think even Voyager's talking about this, but doing those kind of deals where crypto loans are a big business, absolutely huge business where you don't have to sell your asset. You can take a loan. So that in itself is another big statement right here. And the last statement she said is holding them on their balance sheets. This is getting very interesting because Tesla just recorded record earnings and they were holding Bitcoin and continuing to make ridiculous amounts of money on this asset. And they had to actually take an impairment, which is an IRS holding issue, and it changes the whole infrastructure around the IRS and how they might treat cryptocurrency as opposed to an impairment while it's on your balance sheet. So there's a lot of things that come into play on this. This is mostly for businesses or high net worth individuals that all of this right here can affect. So lots of stuff coming, I think, that we've got to be very careful of. And why all of this makes so much sense in pointing to things that are out there. And I want to jump to Plan B that are pointing to this whole issue around where the market is going. So this is his recent tweet. When Bitcoin is in an all-time high, color turns red. It usually stays in ATH mode red for a couple of months. And you can kind of see what he's talking about right here in this continued move with where Bitcoin is going. And if you look at where Plan B has this at 63 close by the end of the month, the continuation, and I think his for November, I have to look back on it, I think it's 98. It might be 98 in December. I got to look at that. But he's been very dead on with where his regulatory or his analysis on Bitcoin has been very tight. Of course, he hit it last month in August, and of course also in September, or last month in September and also in August. So all of this is leading to kind of this top news story of the day. And I wanted to get you guys understanding a little bit about why this all, as I said, news continues to hit. You've got Rand Paul, you've got the US regulators on the FDIC trying to figure out how to integrate this. You've even got, the crazy news of today that I thought was interesting was that China was looking at uninstituting the ban on that. I'm still not sure if that's a joke, or maybe that the Westerners don't really understand what they're trying to do in China around cryptocurrencies. That's going to be a big question mark on how that goes and whether or not. I mean, if China were to unban Bitcoin, that would be absolute world news at its top level. Let's jump over to the big story, and that is crypto strategist unveils massive price target for Bitcoin by December. This is by December, and this basically following the 2017 for that. I've got notes here. Plan B's numbers were 98K by November, December 135K. So 98K November 135. So very similar to what this crypto strategist is unveiling, TechDev, on where he is rolling. An emerging crypto strategist and trader unveiling a huge price target for Bitcoin in the coming months. He believes the crypto asset is mirroring the 2017 bull market. And as you can kind of see, TechDev tells us he's got 100,000 followers. The current price of Bitcoin looks very similar to the Parabolic when it rallied below 4 and went to 20 in a couple of months. And you kind of look at where this is going after 148 days slightly flat, and this is the 2017 fractal continues to prediction. You can kind of see how that worked through where it happened in 2017. Based on this analysis or this analyst chart, Bitcoin could skyrocket to an all-time high above 180 by end of 2021. So we're talking here just 60 days away. We're talking about 180. That's 3xing, people. That's 3xing your current price of Bitcoin into basically a very short period of time. Question I have, and I want from you, just a reminder, hit us up in the notes if you've got some super chats. Bring them in, man, because we'll get to those questions for sure. But hit us in the notes because in the chat, because we want your input on whether or not you think this cycle is going to be broken. And I know there's a lot of people out there that are saying, hey, man, let's do it. We're going to break this cycle. And there's a lot of analysts and YouTubers out there that believe Bitcoin is still in its core cycle of 2017 and 13, and that is 80% corrections. I'd like to know your thoughts. Do you come on, say it's going to 1 million. I love that. I hear you. I see you out there. I see you out there, Rob. I see you right now. I know you're in there in the interwebs. The point is that when you get this kind of movement in the space, a lot of people start to question the overall financial architecture. Now remember, this is one of those scenarios where if you get one major piece to fall, it is like a domino house. It starts to move so quickly. Imagine ETFs. One major ETF moves into the market. What happens? More ETFs follow. The next direct ETF, spot ETF, will be coming. When that happens, what will happen? More spot ETFs. Once we see major G20 countries start to move in this direction, we're going to see massive onslaughts of crypto acceptance, I think global. And I feel right now that with what we're seeing, and again, I have to be careful because you can get caught up in all this buzz. You can get caught up in this stuff and you can lose your head, all right? So I want, and you guys are not those people. I know you're not because you keep a very solid head about you. Do not invest with your heart. Invest with your research. Go out and do the work. Understand what you're getting into, and don't follow the crowds. Be careful of following the crowds, because if you're going to where the crowds are, unfortunately the profits have already been taken. I mean, the bags have already been packed and they're at the door waiting to go out. So you got to be careful, and you've got to do your research and your due diligence on these projects, including Bitcoin for that matter. I know a lot of people are maximalists that watch this channel, and I like that about you, because you are convicted around something that is absolutely your cornerstone of what you think is going to happen in Bitcoin, or in crypto. And I would agree with you there. And when you look at these cycles, according to TechDev, it's kind of interesting, because he's comparing the 2021 and 2017 cycle, and you can kind of see what's on chart there. It has a lot of similarities. I don't, I don't really mock this or say that it can't look like the same. The difference that I would like to bring everybody's attention to is that we have a lot of things happening, and I know there was things happening in 2017. You had China banning it for the 27th time. All those kind of things were happening. We didn't have the FUD engines that we have now in 2017, for sure. We didn't have ESG in 2017. We didn't have manipulation from the whales in 2017. We didn't have major mainstream investors moving at the pace they're at in 2017. Regulatory in 2017, technology advancement 2017, Bitcoin mining advancement in 2017, hash rate movement and shifting in 2017. You get where I'm going with this. There's a lot of differences around 2017 and 2021, and I think we need to be very cautious on not overestimating how fast it can move to the top. I'm definitely still on my 100K. I feel very good about that, but as you guys probably know by now, I'm a bit more conservative in where I'm looking at projects, because I follow the data. You follow the data as best you can. I know there's not a lot of fundamentals out there, but sentiment is a very, very critical aspect. We've developed a technology within our own proprietary tracking system, now calling it the Crypto Power Index. This has proven very accurate over the past several months. We've continued to hit early identifiers on some of these tokens that have been moved. And hey, we've missed a few. We missed Axie low, but we called Axie as a rise. We just didn't get the note from everybody that Axie was getting ready to fly off the handle. But again, Axie has certain elements in it from a tokenomics side of things, which if you guys have not checked out, if you want to understand tokenomics, I want to send you over to my friend Invest Answers, because he does a lot on tokenomics, and he has a team over there that does analysis on that. We look at tokenomics, and it's part of our puzzle that we try to put together, but we also really drill into our sentiment data, which is the graphing of all of the data that we pull in through our APIs to really try to track it. And we have one of the most unique tracking mechanisms out there, and that's amplification. Amplification is interesting because it gives you a forward-looking indicator out about 7 days on most normal tokens or normal projects. When you get into a project that's as big as Bitcoin, because of the amount of data, you can start to forecast a little further, because there's enough data there to really look at long-term forecasting. But back to what TechDev was talking about. He's talking about this retracement here of October 20th in 2017, and then this push to higher. Has the same similarity that he's trying to point out right here. Let me kind of zoom in on that just a little bit, because it's really interesting on how close this has in terms of how it's looking. Now, what I would say in data is, and I've been a data scientist for over a decade and a consumer analyst, you can make this stuff almost look like anything you want it to. So you have to be very cautious when you start looking at trends that are historical. Historical trends, I have found over time, unless you have something that is literally lockstep, no change in differences, no contributing factors that give an outcome differently, it's difficult to mirror. Now, you can paint it in different data credentials by pulling up different data modules to say, let's map it according to that, and we can figure out where Bitcoin is going. Sure, you can do that, and I think I could almost make any chart analyzing it, a few different ways and be able to come up with similarities from, previous runs. That's where it gets a little bit dangerous, and I think that's what you guys have to watch out for. In his tweet right here, 2017 versus 2021, indecision weekly candle on the exact same week. He is referring to that. I just don't see that happening by date. I feel this is a manipulation to a certain extent. There's big money at play here. There's a lot of backroom deals that are being done, just like the stock market. It's no different. You're just trading a different type of vehicle. And I feel like you just have to be a little bit more cautious. But the macro, if you look at 2013, 2017, he kind of shows you the variation. But here's where it gets very interesting. Should Bitcoin continue to track in 2017, TechDev's BTC market says capitalization could soar to as high as 11 trillion by early 2022. Now, let's just put the math to that for a second. We're at 1.5 trillion right now. So we're at, what is that, almost a 10x at 62K on Bitcoin right now. You tell me if we're somewhere in the 500K market. I'd love to hear your input. Do you think we're in 500K zone before or in 2022? That completely throws out the methodology of bull cycles and bear cycles. And it throws out the methodology of historical mapping against what Bitcoin has done. In other words, like Michael Saylor says, we are in new water, uncharted. And I think maybe as we continue in toward the end of the year, because we're barreling toward the end of the year quickly, the data seems to be leaning toward very uncharted waters, and it continues to kind of go. Last up is our chart. We're going to get to that, and I want to kind of show you what we've been doing over the past few months is really looking at this sentiment and how it holds against us. Now, what I want to show you, if you're first or new on this channel, those purple zones are basically our sentiment and amplification maps that we lay over the indices, much like a market cipher. You know, you'll set up here and you want to do an indicator and say you drop a market cipher B on this chart right here. It's kind of like that, okay? And it's what we call our super squigglies. Super squigglies. And the guys just love that. They love the name super squigglies. Anyway, the purple zones are when we overlay sentiment and an amplification. Now, what I want to show you is when that occurs, it lines up very nicely with where Bitcoin's price goes. And it's much like other things that happen in the market, news, orientation, all those kind of things that help you. Now, what we do is we grab these little things we call sentiment bubbles. That's the little white, you know, looks like pimples on your face there. Those little white pimples on the sheet that basically grab in data when Bitcoin is on decline. And the reason we do that is because sentiment will give you false signals when something is on fly. When it's on a full-blown tilt, it's very difficult to get accurate sentiment data because it's it's almost like Bitcoin. At some points, it becomes overpurchased, overbought. And that's what we've been watching for quite some time. So we've watched it right up to this last little dip. And let me jump out here to our 1 month right here, to this last little dip right here, which is what we experienced right there on October 20th. The little slide into the 23rd, and we were down in that zone around 60. We had actually hit 60,000. I think we were trying to bump the 59,000 mark. And then again, back to our scenario of looking at where this goes over time. So in this dip right here that we just looked at, sentiment was at 78.26. Now this was up from the previous one that hit on the 27th of September, this little guy right here. 27th of September, amplification 76.81 was the first time it flipped. And when a flip occurs, an amplification flip occurs, parabolic moves happen. And that's exactly what went on. It actually went outside of where we thought it would go. And if you look at it, let me draw some squigglies for everybody. If you look at it, we missed it right here. It was higher than we anticipated. We thought it would be in this zone, and we missed it right here. And then we saw this little dip right here, and sure enough, we saw a little bubble going down. And then we saw this one right there. That little dip was signified right there in that little bubble heading down in the chart. So what happens now is we look at, well, okay, let's take a look at sentiment in this off few days. So we pulled sentiment again, and now, boom, we have sentiment now holding in at 78.26, another rise between 75.93 and amplification right here, flips again 79.27. and you've got a 76.81 down here in comparison. So when you have that kind of move, guess what happens next? This is what happens next. You get parabolic moves. And parabolic moves means if we're holding this kind of sentiment, providing, remember, all of this moves on news. News moves the market, just like on most stock and any other derivative, news moves the markets. Markets, once they're moved by news, then that starts money flow. Money flow, of course, affects everything, and that's when it gets rampant or rabid in some cases. When money flow starts to move, people get nervous. You know, we know what paper hands are, and that's when the paper hands come out. Okay, so that's the scenario you have to watch for. So what I'm looking at right now, let's just kind of put some numbers on this because this is getting very interesting. And right here we've got November 1st. We look at possibly a little high right here at 73. That's in just a few days. Look where we're going right here. This could be our high. Now our low, sure, it could be down here in the range of around 64 and be a moderate growth or a little bit of sideways chop. I am a little bit concerned about this data set right here that we pulled in. This is a little bit of a concern. And anytime I see those, especially if it doesn't align up here, meaning we've got a potential move out of this. Granted, if something, again, major happens with one of the banks or you get somebody that really is going to move quickly on an investment for the end of the year, that starts to change your format and your forecast on where this is going. But if you look all the way out to the 15th, now we get into a potential target zone of around 83. Now this gets very close to where Plan B is talking about. And that is when I start seeing sentiment for the first time matching up to stock to flow. Stock to flow, if you have not studied Plan B, look at what stock to flow is, understand the stock to flow model. I don't necessarily live by stock to flow. There's so many different models out there you guys can look at in TA. And again, I don't claim to be a super TA. We have Evan Aldo that comes on our show occasionally that really dives into market cipher a lot with us on technical analysis, and that's one science behind it. We live on and die on the sword of sentiment and what moves the market, because in my opinion, that's the first thing that happens before markets move. Once a story gets going, the rampant flock of investors move to a project, whether it's Moonbeam, Moon River, Axie. You just list the numbers, okay? We did it. We've seen it with Cody. We've seen it with Polygon this last week. We saw it with DOT. We called it with Doge the other day. I mean, there's so many that we've been able to hit on where these markets are moving. Now, remember that we have these short windows, these 7-day windows that we feel like the data is too mushy. Once we get beyond that, we are getting better. And of course, Bitcoin's a little different because there's so much data out there to grab. So that's kind of where we're going with it. I want to hear your input, guys, and ladies, on what you think is going to happen over the next 60 days, because this is going to get interesting. We'll get to the questions here because there's a ton of stuff, man. There is so much stuff that is coming at us. I'm telling you, I wish we had about 10 more analysts to be able to look at the number of projects. It's just that time of year. I feel like the next time we see this kind of movement, we've got to increase our team by tenfold just to deal with the amount of projects that are coming at us in big time. Anyway, let's get to a few. All right, so hey, if we get a shot or BTC goes to just buy BSV, that's Andrew Sawyers. So he's saying if we get shot or by Bitcoin, I'm assuming you mean that if just Bitcoin gets going so fast that it's like trying to catch a falling knife, that it becomes a difficult thing to acquire. The other thing I always recommend is, if you don't follow Rob over at Digital Asset News, he's a big proponent of dollar cost averaging, and I believe that as well. And that's just a really good way to invest. It's what I do. You're always buying the dips every time a dip occurs. This last dip, I bought some ETH, bought a little Bitcoin, traded a little ETH. That's the way you play these markets. Buy the dip, always buy the dip, anytime you can, with exception of when we hit the top. And that's the art of investing, knowing where the top is. I'm looking at Tesla right now. We just did a story yesterday with Tesla and one of the analysts that we really study Tesla with. And Tesla, at time of filming, we were at 970. They broke $1,000 for the first time, and this morning they cracked 1050. So it's just one of those stocks that are just Whether or not it's going to continue to hold, we'll see. And of course, if you have not followed Tesla, you should check that one out. All right. Oh, okay. I like that one, John Parker. Faces will melt. This thing is going to do face melting climbs. You're going to need a lot of plastic surgery out there after that one. All right. Millionaires in the making. This isn't questions. I just love the comments that are coming in. Millionaires in the making for sure. Thank you, Jeff. That's going to happen to a lot of the people on this channel and more of the big channels out there. I want you guys to be aware. There's a lot of YouTube channels that I think are a little bit over sensationalized, and I won't say who they are, but you might know them. And I think what you guys have to always remember, and I understand everybody wants to get in when it's, face melting profits, and that's great, but you're dealing with your money, all right? It's different if you're 25 and you've got everything ahead of you to lose and win back. But if you're a little older and maybe you're looking at your investment, I would look at it that way, even though I'm very aggressive on investing. But I'm a Gen Xer, so I'm still like, hey, I got a bunch of years coming. So anyway, we're gonna click View Q. Got it? Yeah, we're gonna do that. All right. So man, these guys are coming in like crazy. All right. When this is a good one for Joseph Morgan. When does XRP do big things? Doesn't it mean the money will hit Bitcoin first? That's a good question. XRP. We're a big fan of XRP on this channel. I like just XRP. I know it's the banker's coin. Don't hate. But what I like is Ripple's strategy. And they're also starting to do some interesting things around it. Don't sleep on Ripple, even though we have this thing with the SEC going on. Whether or not we see that lawsuit actually resolve this year, still questionable, even though I'm pushing for by end of year. When it does, or even gets a hint that we are close, Ripple is going to get very dangerous out there. Very dangerous for Ripple. When I say dangerous in a good way, meaning you're going to just try to figure out if you were in the 5X crowd or the 10X crowd of where Ripple is going to go, because there's a lot of pent-up demand there. All right, we're going to do, all right, so Amar Saka, would you please do a new analysis for Phantom and Solana? Those are both good ideas, Amar. We keep those on our big track rec. We follow a lot of the leaders out there that are analyzing Solana. We picked Solana's growth and almost hit it to the day. We also were recommending Phantom early on and saw the kind of moves there. So we probably are due another analysis for both of those. All right, John Parker, I think that's a good statement there, John. This cycle is different and will be less volatile. And I think, John, you might be right there. I'm in your camp in terms of less volatility. When I say less, meaning not 80% market correction. Listen, we could all be here with egg on our face come February or March when that thing is setting at 20K. I'm not putting bad karma out there. I'm just saying that can happen. But I do agree with you. I feel like that we are there for sure. I like the fact that you're swing trading. Good. I love that. Long-term entries and then taking profits. You got it, man. You are on it. You are one of our Diamond Circle members right there. That is a Diamond Circle. Kudos to John Parker, because that's exactly what you're going to get from the Diamond Circle. Don't forget, get into the Diamond Circle, man. It's free of charge. We're giving away and dropping NFTs. We're doing some great giveaways on tokens. We just gave away some, what did we give away last week? Some Polygon, I think. Yeah. We gave away some Polygon. We gave away some Cardano. We are just, you helped us grow this channel. You deserve the rewards, and that's what they are, digital asset rewards. Back to you guys. Join, it's free. You're going to get other things that we're dropping over there as well. All right, let's get into J. Cool. Paul, not possible. I like this. I like these challenges. Paul, that's not possible. I think Bitcoin will get to 85K best in December. J. Cool, I'm kind of on the fence there, J. Cool. I've still been a 100K proponent from early this year, just seeing the potential of where this market is going and the speed in which things happen. Because remember, economics and tokenomics don't really apply, and really to a certain amount, technical analysis start to lose all of its fervor when the market gets heated. When the market gets heated, people do crazy things. They keep buying at the top. They continue to invest. And that's what drives these massive parabolic moves. And I feel like that's where we are, which is what Plan B talks about, which is kind of second phase of this bull run. So definitely moving on. All right, like it. 2025, Lord Richie McAuliffe. So, Lord Richie, you're right. I think you and Kathy Woods both are in the same camp. She's picking 500K by 2026, 5 years out. And I trust Mama Kathy. I think she's Queen Kathy, I should say. I think they do enough research over there to understand where this is going. Whether you follow someone like a Saylor, or you follow someone like, Raoul Powell, or you follow Cuban, or you follow even Mr. Wonderful, all of these guys are coming to grips with what is happening in the market right now. And I think that's going to be interesting there. Steve Tadler, Hopium, sadly, 100K is a stretch, 500K is ludicrous. I love that, Steve. Keep it coming, baby. Keep it coming. Bring it. We like that, because that is what crypto is about. Differing opinions, but put your money where your mouth is what I always say. So we'll see if I'll call you up on December 31st when it's 100K, and I'll make sure and say, Happy New Year. We are here. We are here, Steve. Steve, we are here. Oh, that's a good one. I should do that one. That great voice from one of the, I forget the movie, Steve, we are here, Steve. We are here, 100K. That's what I'm hoping for. All right, jumping over here to more and more alts. Let's talk about Chill Money. You're back, Chill Money. You've been in our chat a lot. Alts going to go nuts. I agree with you there. We are trying to track down as many alts as we can. NFT gaming, I will just say, we're getting ready to drop a lot of knowledge on you guys in the aspect of NFT gaming. But what I will tell you right now is get your pants on or your skirts on for NFT gaming, because it's getting ready to get crazy in NFT gaming. And I don't know if you guys have really jumped into Axie to understand that ecosystem. I started really doing a lot more in-game stuff of understanding how to buy, sell, invest, do scholarships. Axie has a very interesting ecosystem under development right now, and they're one of those early movers. Who's an early mover that you can think of? Who would be that? I don't know, Bitcoin, ETH? Those are, I think, with Axie, so be watching out for those. Alts, you're right on. Chill Money, right on. All right, if we go parabolic, let's go with Bob Hayes. If we go parabolic, we'll also have a parabolic dip as well, LOL. Bob, I still feel that we are not as harsh this time around in terms of our dip. Hey, listen, if you guys watch BitBoy, he talks a lot about a parabolic dips, 80% corrections. That may be the case. I'm just not necessarily seeing it right at this point in the game. But again, as I've said before, you can get blinded really easy when things are on tilt. So just be cautious out there. A couple more I'll mention here. I think, okay, all right. So David's Corner, I think Bitcoin will hit that number sooner than we think. Like it, we aren't even at 100K free. Kleckstein, Bitcoin market increase, correction decreases. I feel like that stock that's coming over from DeSanti. It's like, yeah, I would agree with you, DeSanti, because if we see a major correction in the stock market, Bitcoin's going to follow suit to a certain extent, even though I feel some people would use it as a hedge and try to move money in there. If we saw a massive, I know I would. I think if we saw a massive correction in the marketplace right now in stocks, I would probably take a lot of my portfolio and try to reposition it in some crypto, maybe not all Bitcoin. I might go into maybe by that time ETH 2.0. So anyway, listen, we got a ton coming in. All right. Okay, I want to shout out to Digital Asset News. Thanks for stopping in, Rob. Saw the interview yesterday with Mark Moss. He thinks we could be a bear market coming if we have a blow-off parabolic. I would agree. Mark and I talked about that in depth, about where the bear market might begin and what that might look. He is a big proponent more so of the Fed having more impact, and that's about the issue of fiat money that could cause a lot of this turbulence that could be in the market. So be careful, as I've said many times. All these kind of things are very, very cautious. Listen, you're watching this channel, you're watching other channels like us. You guys know the score. You know the score, and it's easy for you to keep up with all this. For you newbies, for you people that are just getting into this market, you saw the headline today on the Wall Street Journal, Bitcoin to 100K by the end of the year. That's probably what you're looking at, or something like that. I want you guys to be very careful here, because this is where it gets dangerous for all investors. And I'm not giving you financial advice. Hopefully, we're just giving you some education to get you going on your direction of helping you understand how to play this market out, because there's some big profits that can be made. There's also some people that can get wrecked very easily. So caution is there, and you should always be at this level of these kind of market moves that we are seeing right now. All right, you guys are tuned in. Thanks again for stopping in for another live. We are going to continue to do Diamond Circle giveaways. We didn't have one today, but stay tuned. Very soon, we're going to do another one, another airdrop from the PBN. We'll catch you next time right here on TechPath. Blah, 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 blah.